thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussions with what's driving mortgage rates on a daily basis, whether it might come something from the economic calendar or headline news or geopolitical, sometimes a combination. But sometimes it gets even more confusing as somebody who's watching rates when there should be good news and now it's bad news. And that market sentiment changes really kind of throws a little wrench into the minds with a lot of people. So we try to give an explanation of what's going on with the markets and what investors are doing and how to try to give you some tips on maybe how you can proceed going forward. So a little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So please feel free to reach out for us if we can be of any assistance in terms of refinance or purchase needs. We do got some great products out there, including very well priced ARMs out there, which seem to be the very popular loan program of choice today due to the rising rates. So these ones could be very great in terms of pricing, an option for you folks. But not only that, we like to be a resource for you folks. So if you guys like to learn, have any questions that like to be answered, we'd love to be able to help you guys out with that. So please feel free to reach out to us. In the meantime, why don't we jump right into the economic data today and the report. We get this minor report that every Wednesday is from the MBA, Mortgage Bankers Association, which basically gives us an idea of what the loan activity reports or mortgage loan activity report. So from week to week, we can know if they're going up or down. So on the purchase side, we actually see an improvement from last week that has increased. However, on the refinance, due to the rising rates, it has continued to decrease a bit. Now today's the big day in terms of data we've been expecting. It's kind of like it has the most impact this week, and that is the CPI report, or Consumer Price Index. This is inflation data for the consumer out there. And we'll start off with the headline number here. So these kind of mixed in there. We'll take a look at the month over month for the number there. So for the month of April, so March it rose a pretty big number at 1.2%. Forecast called for 0.2% in April, and it came in at 0.3%. So it brought its annual from 8.5% with a forecast 8.1 to 8.3%. So it came in a little hotter than forecast, but still came down. Now, when you exclude food and energy, which just gives you the basis, because those are two variables that we have no control over, this is really what they'll look at for real inflation for the most part. Now, the Fed looks at the PCE as their favorite gauge for inflation, what they'll call real inflation, but there is still a lot of weight in terms of what's given to the CPI report as well. So it's something we don't take with a grain of salt. And it's month over month for the core. It went from in March 0.3%, forecast called for 0.4%, and it went a bit hotter at 0.6%. However, it's year over year went from 6.5%, even though there's a forecast of 6%, still came in lower, but not to what expectations came in at 6.2%. So it still came in pretty hot. A lot of this data, if you look back, because it's over a 12-month roll, the previous March 21 had a pretty big number there, and that number now rolled off, which is one of the reasons why we're able to see a drop in terms of the data. But if you look at the month over month, it was still kind of a hot number, and this is something that the Fed should be looking at. And some investors, economists are now projecting that even though they said that 3/4 point hike may be at the table, they think that maybe this could reignite those fires, so to speak, that maybe the Fed should be looking at this, and maybe they will now reconsider after looking at this today. So as a result, stocks are down, take a bit of a tumble, and some of that money is now going into mortgage-backed securities. Now, if you look at the chart here, the chart looks like it's way down. However, this is actually not as bad as it looks like. We had what they call a bond rollover, which means that May's package of loans or our package reset and will be sold on Wall Street. Now we're starting a new month, which will be June. So we'll be packaging those up, and it has a reset in the pricing, but it doesn't have any factor in the mortgage-backed securities or our mortgage rates. So on our rate sheets, we won't see any difference. It just look different on the count or on the graph here a bit. So it looks like we're way down, but not as bad as it was. Now we were down earlier this morning as that report came out, but it has quickly subsided as money kind of flowed from mortgage from stocks back uh, into mortgage-backed securities. One of the issues we're going to probably run into is illiquidity, so that's something we'll have to kind of watch out. There could be some liquidity issues coming down the line here, but uh, so stay tuned. But right now we're up 8 basis points. We've had a number of reprice for the better. So as you can see, we're way up here. We dropped almost immediately after the bell, but since then we worked our way back upwards a bit. So we have some price improvements. Most of the price improvements basically put us in a position probably slightly better than what we were yesterday, due to we were even up like 12 basis points. So we had a number of price improvements, and then of course now we did touch on the 3% level, as you can see here in the yields, but since then has pulled back. So right now down to about 2.93 in terms of the 10-year Treasury right now. Last, we'll take a look at the average rate for conforming limits. They do have points built into them, and they're kind of usually lagged by about 1 day. So the 30-year fix now is at 5.4%, and then you look at the 15-year fix is over at 4.78% right now. So hopefully that answers, gives you the information you're looking for. But again, we'll be looking at tomorrow. We'll have the PPI report. This will be inflation on the wholesale side of things. Now, typically it doesn't have a lot of weight to it, but because it is inflation, we will probably have a little more weight of these days, since that is the hot topic these days, and because eventually, if it gets too excessive, the costs get too excessive, it does get passed on down to the consumer. So it is something that we'll keep an eye on, and of course, they want to see if all levels of inflation is coming down, or hopefully it peaked and kind of come down a bit. So, anyways, again, we're here to help you guys out. If you guys got questions or anything that we can touch base with you guys on, please, if you guys looking need a refinance, or especially cash out refinance, or you are looking at buying or even like second homes or whatnot, we do have some great rates with our ARMs. Our ARMs are fantastic. I don't think they could really be beat. So please reach out. We could certainly talk to you a little bit about that. I'm working on one deal right now with a cash out refinance where I'm saving my client 1.5% in the interest rate. So a pretty big difference with that. So with that in mind, I hope you guys have a great rest of your day. Thanks so much for watching. If you guys like these videos, please help us out. Smash that like button and share. We greatly appreciate you guys. You guys have a great rest of your day. See you guys tomorrow. Bye-bye.